I don't own any ETH, and the only reason why I would have ETH is so that I could pay the gas fee to swap out an Ethereum token for a better cryptocurrency. In this video, I'll share with you the 9 reasons why I believe Ethereum will fail as a smart contract platform. All right, before we get into why I believe Ethereum will ultimately fail, I have a few statements to make. Number one, this is not financial advice. Do your own homework, make your own decisions. Second, I believe that ETH will go up in the next bull market. We're already seeing, at the time of this recording, Bitcoin starting to go up, passing 62,000. So I believe that Ethereum will follow along in this bull market. However, what I'm saying here in this video is that 3, 5, 10 years down the line do not look good, in my opinion, for the future of Ethereum. Ethereum will probably stick around in one form or another, but it will probably be relegated to some sort of a niche market, probably a niche trading market or a niche NFT market where people will still have assets on that marketplace. And finally, I'm totally willing to accept that Ethereum 2.0 could solve all of the issues that I'm going to talk about in this video. However, what they're doing with Ethereum 2.0 is essentially redoing the entire system. And when you undo a system without making any errors and then you redo it with something else, that's much, much harder than if you built it from the ground up with proof of stake to begin with. All right, now that that's out of the way, be sure to stick around to the end of the video because I'll show you how to analyze the smart contract space to figure out which smart contract blockchain could overtake Ethereum in the next few years. Let's start with the big picture here. One key concept in trading and investing is whenever you find yourself on the side of the crowd, it's time to pause and reflect. And that's what Mark Twain said. So there are some cases where the crowd could be correct, like in the case of Bitcoin. I believe that Bitcoin will last because it does a good job at what it does. It's a good digital store of value. However, in most cases, the crowd is generally on the wrong side of the market. And the reason for that is really well illustrated in Charles Mackay's book, Extraordinary Popular Delusions and the Madness of Crowds. And the best quote from that book is as follows: "Men, as it has been well said, think in herds. It will be seen that they go mad in herds, while they only recover their senses slowly, one by one." And I believe that's largely what's going on here with Ethereum. Everybody says, oh, it's going to go up, it's going to go up. And if you look at YouTube, you have literally thousands of videos that say Ethereum is going to go up. But if you look for the videos that say that Ethereum is going down, you can only have a handful, maybe 5, 6. So at that point, you have to ask yourself, are you just a sheep who's following along with everybody else? Or are you a wolf who's actually hunting these good opportunities and looking at things objectively so that you can find the best investment possible? The first thing we should look at here is, what was Ethereum built for? What's its purpose? And Ethereum was built to host decentralized applications, or dApps, right? And these are just like the web applications you use on the internet, in your browser, or mobile applications that you use on your phone. The only difference is that these applications on Ethereum are hosted on multiple computers and they're completely decentralized, but they serve the same purpose. Now, this is going to be important a little bit later on, but just keep that in mind. Now, in order to create these decentralized applications, they use what are called smart contracts. And these are simply programs that do something, right? You have the smart contract here, you send in some information and it sends out some information and it does some processing in the middle. So this is pretty simple, and I think a lot of people know this, but they forget about it when they analyze Ethereum as an investment. So keep this in mind throughout this video. One reason that people like Ethereum so much is because a lot of people think that they have the network effect or the first mover advantage or whatever buzzword you want to put in there. Right? And it's true, they are huge. The first mover advantage has been big for Ethereum, and that's the reason why they've expanded so much. But you have to understand that what comes up must also come down, and things go in cycles, right? So there are some things that were so huge and people thought there's no way that that company could fail or that concept could fail. But over time, better things came out, and that thing ultimately became insignificant or it went away altogether. And here are a few examples. Let's start off with the two biggest issues currently in Ethereum. I'm sure most people know about this, but if you don't, I'm going to go over it really quickly. The first one is fees. And it costs a lot of money to do a Ethereum transaction. For example, this is a site called crypto.com, and they track the Ethereum gas fee for each transaction that you do with Ethereum. So that means with Ethereum or any of the Ethereum tokens. So on these swaps, they have a gas fee of as much as $95, and that's for every single transaction. So just think about that. It's like doing a stock trade, and every trade you do, you're paying $100 just to do a trade, whereas some of these discount brokers will do it for like $7, right? So this obviously cannot go on, and this will lead to what I'm going to talk about later in this video, and it's going to cause people to start using other platforms the longer Ethereum 2.0 takes to come out. Another example of high fees comes from my own experience with BAT, or Basic Attention Token. So I like to try these systems out, try these blockchains out, and see how they perform. So I earned a little bit of BAT by using the Brave browser, and as you can see at the top here, I made 36.25 BAT. Now of that, when I tried to withdraw it, I only got 4.3 BAT because 31 BAT went to the network fee. And as you can see, that just doesn't work. That's not going to work for any of the tokens on the network, and it's not going to help Ethereum become an actual smart contract platform. So that's pretty simple to understand. But before I get off the idea of high transaction fees, it's important to also talk about front running. So what front running is basically you have a bunch of transactions here that are done, and this is time, right? So if all of these transactions are willing to pay the same gas fee, then these transactions will get picked up sequentially by the miners. However, let's say that this guy over here adds a little bit more to his gas fee. Now he will probably go to the front of the line because miners want to get paid. So if that happens, he's going to shortcut these two guys. And this can be a huge problem because if, let's say, a miner knows that, or somebody knows that there's going to be a lot of transactions in a certain direction. Let's say that he knows that a lot of people are going to be buying a certain cryptocurrency because maybe a website just featured it, a big website just featured it. So what he can do is he can pay this extra money to jump ahead of these guys and get a better price, while everybody else is going to be stuck with a higher price as prices start to go up. So that can be an issue with Ethereum, and again, they're trying to fix that with Ethereum 2.0, but that's one of the reasons why Ethereum currently isn't a good smart contract platform. Then the second big issue with Ethereum is obviously going to be the slow transaction times. It can take sometimes several minutes to execute a trade or do some sort of function on Ethereum just because the network is so crowded. And that's a big problem, right? If the network is crowded, it costs more to transact, and the transaction times are going to be slower. So it's not going to be conducive to being a real smart contract platform. So again, this probably won't be an issue in Ethereum 2.0, but the longer it takes to roll out 2.0, the more people are going to jump ship and go to these other blockchains. All right, the third reason why I think Ethereum will ultimately fail as a true smart contract platform is because of what I call token bleed. And that's as follows. So you have the ETH coin here, and then you have the exchanges where you can trade. So on the exchanges, you have these liquidity pools, or these wallets that you send ETH to, like that. Okay, from there, once you get the ETH into the exchange, then you can trade it for these tokens that are usually called wrapped tokens. So you have wrapped BTC, wrapped Litecoin, wrapped ADA, etc. And on different blockchains, they're called different things. For example, on Secret, it's called Secret ETH, but it's all the same concept. You're basically sending in the coin, then you're minting this token, and then when you exchange it back out, this token gets destroyed and you get the ETH back or whatever you want back out of it. All right, so once you have these wrap tokens, then you can trade them for each other, and this is a cheap transaction, right? This may or may not be cheap, but it's generally cheap relative to this transaction here, which is expensive, right? So you can get exposure to these assets like Bitcoin, Litecoin, ADA with a much cheaper transaction fee, because also you can have wrapped Ethereum ERC tokens. So you could have something like wrapped that, or wrapped, what else is there? There's DAI, right? Whereas if you traded that or DAI here, this can be a pretty expensive transaction also. Depends on how you do it, but it can be expensive. On top of that, ETH is relatively expensive. The price of ETH is really relatively expensive when you compare it to the native tokens on these other blockchains. Okay, so people will see that cheaper price of these native coins, and they will think, oh, this is a better deal because it's cheaper, when in reality the higher price is actually less of a risk, because the price fluctuations are going to be a smaller percentage of the price. But nonetheless, people are going to perceive this as, you know, there being more upside because it's cheaper and you can buy more, etc. So that makes these native coins more attractive to the average investor, and they're going to see more downside or potential downside risk with ETH when that's not actually the case. But I'm just saying that this is more attractive to the average person. Once you get the native coin, you can also trade that for any of these wrapped assets, these wrapped tokens, and that's going to be a cheap transaction and easy to do. So once you go through this process and the average person takes a look at this whole thing, they're going to realize, hey, wait a minute, why am I doing all of this over here, these expensive things, when I can put them into an exchange, use these tokens to trade and to hold, and have a much cheaper transaction. On top of that, if you use some of these tokens, these wrapped assets, you can stake them for a percentage yield, and that can be another reason to keep this, to keep your assets in these tokens. So that's why I call it token bleed, because a lot of the Ethereum assets are going to be moved into these wrapped tokens because of the staking, because of the exposure, and because of the cheaper transaction fees. And that's why I call it token bleed. Also, let's take a look at these native coins, right? So that's stuff like BNB on Binance. You got DOT, you got ADA. And these are also going to do a similar thing as with Ethereum or ETH. You're going to move it into an exchange. You're going to put it into a pool, BNB pool, DOT pool, ADA pool, whatever. And you're going to exchange it for these tokens. However, the catch here is that it's more likely that you're going to take it out. If you do take it out, you're going to take it out and put it back into the native coin, because the transaction fee is currently less, right? If you do the same thing with ETH, that's going to be a pretty pricey transaction and very much less likely to happen. So again, ETH is going to go in, you're going to get it in these wrapped tokens, and it's less likely to go out. So that's how things sit right now, and that's the token bleed. Now with Ethereum 2.0, they're going to try and speed up the transaction speed, and they're going to try and lower the transaction cost. But this is going to be a difficult thing to do, because what they're basically doing is undoing the old system without breaking anything and then implementing a new system. So who knows when this is going to happen, and the longer they hold off on going to Ethereum 2.0, the more this token bleed is going to happen. All right, that's all good in theory, but can we see some actual numbers to find out if this is happening? A quick and dirty way to do this is to take a look at trading volume. So you could go to something like coinmarketcap.com, and then take a look at the list of cryptocurrencies, then sort it by volume. And this is going to be volume over the last 24 hours. So as you scroll down, no surprise here, Ethereum is at about $19 billion in trading volume. Then you have Polkadot, which is the next highest, at about 3 billion. And then you got Binance Coin at about 2.5, and then Cardano at about 2 billion. So these smaller cryptocurrencies and these smaller blockchains have quite a bit of catching up to do when it comes to possibly equaling or surpassing Ethereum. But if you start to see these numbers going up, that can be a good indication that they are catching up and this token bleed is happening. Now, if you have any questions or comments about anything in this video, if you think I'm wrong, if you agree with me, leave a comment below. And let me hear about it. Now let's take a look at the Ethereum Premine. So the Premine is essentially when a cryptocurrency project launches their blockchain and they already have some cryptocurrency produced. And then they pass out this cryptocurrency to the developers, the ICO investors, to some other people that are related to the project. And they basically give their coins to the people they want to have it. Now, that's not such a huge deal when it comes to proof of work, but when they move over to Ethereum 2.0 and it's going to be proof of stake, this becomes even more of an issue. The reason that this is such a big issue is because on proof of work blockchains like Bitcoin, you have miners who actually do some work in order to earn Bitcoin. Now, on a proof of stake, and this is not all proof of stake blockchains, but the way that Ethereum is going to go, they're going to base your probability of being chosen to validate a transaction or a block based on the amount of Ethereum or ETH you currently own. So you're going to have these big validators, and then if you're a small validator and you don't meet the minimum balance of ETH in your account, then you're just going to be out here, and you can't earn any more ETH by validating transactions. So what's going to happen is you're going to delegate your votes to one of these validators. Right? And this causes centralization. No matter how you spin it, this is going to become more centralized. And this is even more amplified with Ethereum because these bigger holders are going to be part of the Premine, right? So they're automatically going to have a head start on everybody else being validators on this new proof of stake system. So that really centralizes things and makes it so that, you know, this is not going to be a really decentralized smart contract platform. Next, there's already a paper market for Ether, and it's only going to get bigger. So this is an example from CME. They currently have an Ether futures contract. And once they have that first futures contract available, then they're going to do options and ETFs and all this type of stuff, right? Probably down the line. Now, this is not good because this creates a separate price control on the price of Ether. All right, so the way this works is, let's say this is the blockchain, the Ethereum blockchain. And then this is the paper market. You're talking futures, options, ETFs. And whenever there's the price difference between the two, people are naturally going to buy it where it's cheap and sell it where it's expensive. And on top of that, you could have people having a lot of options contracts or futures contracts on the price, and that can affect the actual price of Ethereum. The next reason I don't believe in the future of Ethereum is because of the programming language you use to create Ethereum smart contracts, and it's called Solidity. Now, Solidity has a lot of issues because it was created from the ground up to make Ethereum smart contracts. And whenever you make a new programming language, there are always going to be bugs, and it takes several years to work out those bugs. And from what I've seen, Solidity hasn't really worked out the bugs yet. And one of the biggest bugs is the reentrancy attack. And you can read about that. But the bottom line is that this is not a mature programming language. Other projects are using things like Rust and Golang. which are much more mature and much more proven to be secure against attacks like this. I don't know how much you're going to change this in Ethereum 2.0, but this is a huge red flag when it comes to the future viability of the Ethereum network. All right, here's something that not a lot of people talk about, but it's a really important concept to understand. So with the launch of Ethereum 2.0, that's going to dramatically devalue ETH. And here's why. So like I mentioned before, Ethereum was built to be a dApp platform, right, for creating apps of all sorts. But because of the high transaction costs and the slow transaction speeds, the only thing that makes sense to run on Ethereum right now are purely speculative products, right? So it's a speculation network. So people are speculating on NFTs. They're using these swap platforms. They're doing lending, yield farming, and speculating on the price of the tokens and Ether itself. So one of the reasons I believe that there's so much demand for Ether is because you have to have quite a bit of Ether in your account to do a simple transaction, right? Because the costs are high. So if the costs are high and everybody has quite a bit of Ether in their account in order to do a transaction, that's going to increase the demand. Right. But with the move to 2.0, that's going to reduce the transaction costs. So people are going to need to hold less Ether in their accounts in order to do transactions. This should ultimately lead to less demand and the price of ETH to go down. However, there is a bright side to this, and I believe that the good token projects are going to probably increase in value because the transaction costs are lower, so more people can get into them. But ultimately, there's going to be an oversupply of ETH, and that's why they are burning so much ETH per transaction to get the supply down, so that when they move over, there won't be such a bad oversupply. But I still think there's going to be an oversupply, and the value of ETH is going to drop. Another reason why I'm not bullish about Ethereum in the future is because who knows how long this Ethereum 2.0 upgrade is going to take to implement. It's a very complex process. They're undoing a working system, making sure not to break anything, and they're putting in entirely new piping, right? The way it works is just entirely different. So this could take a while, and it might not work. Vitalik has said that they're probably going to launch 2.0 early 2022, but he hasn't been very accurate in his previous predictions, and those were more minor upgrades compared to what they're doing here. So I don't expect it to be early 2022, but again, who knows? I could be wrong, and maybe they do implement it perfectly. But as I mentioned before, the longer this process takes, the more other blockchains will catch up and take market share away from Ethereum. Finally, and probably most importantly, I don't trust the Ethereum community. If you don't know, early on in the life of Ethereum, there was a hack to one of the projects called the DAO, and a bunch of money was stolen by a hacker. So what the community and Vitalik decided to do was go in there and hard fork Ethereum. So they basically created a different version of Ethereum where the money that was in that wallet, which was stolen, was moved to another wallet, which could be controlled by the Ethereum developers, and the investors in that project could go in and get their money back. Now, that might seem like the fair thing to do, but it's actually really scary from a decentralized, immutable ledger perspective, right? Everything that cryptocurrency stands for was basically thrown out the window when these people decided, hey, let's get the money back and let's change things based on what we think. And that makes Ethereum really hard to trust because you never know when they could go in there again and do this. And on top of that, Vitalik is not good at communicating what's going on with the project. And just all around, I don't have a good feeling about the project. And that's why I don't own any ETH. All right, those are the 9 reasons why I believe Ethereum will ultimately fail as a smart contract platform. Now the question is, what is the blockchain or project that's going to come out that's going to overtake Ethereum and become the biggest smart contract platform? So now let's break down what to look at in future projects. So there are going to be 2 basic flavors of smart contract platforms to look at overall. There's going to be the public smart contract platforms, and there's going to be the private ones. The public ones are going to be good for things like NFTs. If you put your real estate title listings on a public blockchain for everybody to see. I mean, everybody can see that already on county websites. So that's going to be a good use of a public blockchain. Now, a private blockchain is going to be more for financial transactions. Right now, all the financial transactions on Ethereum are available publicly. So if you know somebody's wallet address, you can go look up the transactions they've been doing, which is not good, obviously. So there's going to be a space for private blockchains. And realistically, I don't see any big winners in either of these arenas yet. And they're going to have characteristics that I spoke about before, namely fast transaction times, low transaction costs, no pre-mine, and just a more decentralized mentality as opposed to centralization that I see in a lot of these blockchain projects. But the most important thing to look at when you're evaluating these smart contract blockchains is, are people actually using it for what it's supposed to be used for, which is to build distributed applications or dApps. So for example, on Bitcoin SV, they have Relica, which is like Instagram. On the Secret Network, they have Altermail, which is a private email service. But when you look at Ethereum, there aren't very many applications outside of speculative apps. So that's another reason why I see Ethereum as a pure speculation at this point, and it's not really a legitimate smart contract platform. If you found that video useful, be sure to subscribe and hit the bell to get updates on future cryptocurrency videos. And if you want more in-depth research on the cryptocurrency market, be sure to subscribe to my paid monthly newsletter, and I'll have all of my research in that newsletter. Go to tradingheroes.com to find out more information. Thanks for watching, and check out these videos that are coming up next.